Carm Capriato, the Service Aftermarket's podcast pioneer with the gold standard of aftermarket business podcasts. Join me for Aftermarket Insights as we advance the aftermarket. And as always, know that you'll learn just one thing. Find us on your favorite podcast listening app and remarkableresults.biz or on my YouTube channel. Hey everybody, Carm Capriato, good to have you here. We so appreciate you as a listener and all the sharing that you do on our social media. We're everywhere, and we couldn't do it without you. We hope that we constantly deliver really good news and good stuff to you. Hey, before we get started with my good friend Hunt Demarest, we all know someone who's been affected by breast cancer. And did you know that our aftermarket service repair industry, two shop owners got together, maybe 10 years ago now. They live in Cleveland. They discovered this incredible thing going on at the Cleveland Clinic for breast cancer vaccine that's in clinical trials. And they have currently, I think we're at like $1.8 million over these many years. We want you to get involved. breaksforbreasts.com. You watch a episode coming out soon that's going to give you all the background and all the scoop as to how to get involved and how to get your vendors involved. Well, guess who is here? Yes, it's Hunt Demarest. Hello, Hunt.
Hey, how are you, Carm?
I'm good, man. Business by the Numbers podcast on the Aftermarket Radio Network, 123 episodes as of this recording. So, man, you are on fire. Some of my most favorite podcasts in the world come from
Appreciate
you.
it.
They're great. A couple of great sponsors, Napatrax and Promotive, that make your show possible for the industry. And I was just playing around with some topical ideas, and I said, how do we handle money mistakes that we make, or how do we stop making money mistakes? And I was thinking, do I know a CPA that could come on and do this with me?
And here we are, right?
And here we are. So without further ado, I don't know what's at the top of your list, but I have a list, so we'll see how well it blends together. But what would be a number one money mistake that you're seeing out there from your clients? And by the way, let me just say that what Hunt does as a CPA, Hunt, I'm guessing 98% of all your clients are service aftermarket professionals, right?
Exactly right. Yeah, probably 99% are collision shops, repair shops, dealerships.
Got it. Cool.
Exactly right.
Give me the first thing we should pay attention to and not make a mistake when it comes to money.
Yeah, and so, the unique aspect that I have is I see people's public persona, right? And I see what most other people don't see, right? I see their finances, I see their tax returns, income, and stuff like that. And I would say that the biggest mistake that people make is confusing income or, hey, I'm rich versus I'm wealthy. The big determination there is you're rich if you make a lot of money, you're wealthy when you keep a lot of money. And I think that a lot of people forget that. And one of the most surprising things that I've noticed over the years of doing this and seeing people's tax return is there almost seems to be an inverse relationship between the rich and the wealthy. Meaning, my clients that make the most money on an annual basis are not in the top of my wealthiest clients. Some of my wealthy clients that are independently wealthy, they could sell their shop for $1 and they would still be able to retire. Their house is paid off. They have pieces of commercial real estate that are all paid off. Some of these guys only made $100,000 on their best years. And you talk to them and say, how were you able to do this? And the biggest kind of, reoccurring theme is, well, hey, I didn't live beyond my means, right? There were times where we didn't go on the vacations that some of our other friends were doing. We weren't buying the brand new cars, but we were able to have the peace of mind of having the reserves. We weren't living paycheck to paycheck. And also, you see, people are creatures of habits. Our businesses are no differently. We talk to a lot of shop owners. If you've averaged 10 hours a week or 100 hours a week or, $10,000 in sales, that's probably what you're going to average in the future. You're a creature of habit. So is your team. So is your counter people, everyone. And your spending is no different. And you see people just get on these wheels of, hey, I'm used to living on 200 grand. Now I'm making 300 grand. I'm going to live off of that. And you're always kind of stuck up in the rat race of I'm going to get this, I'm going to get this without having that long-term goal. So what is the biggest takeaway from that? yeah, you can always make more money, and everyone is always going to coaching companies, talking to their accountant. How do I make my business more profitable? There is a pretty easy science, not that it's always easier said than done, but I think that the biggest thing that is affecting shop owners, and I would say to a large extent most self-employed people, is instead of making more money, we need to worry about how are we going to invest this money, set this money aside so that we actually are building long-term wealth here.
Well, that's my big takeaway. It's about that long term. It's about future think, not about tomorrow and trying to keep up with the Joneses that are next door, who obviously think I have a great business and I'm making a ton of money. And does personal and business blending of those expenses is that a factor for the individual who could be struggling?
Yeah, so everyone knows the games that self-employed people play, right? Is a Home Depot charge a personal expense, as a business expense? It's all in the eye of the beholder, right? And so, what I always tell my clients is, hey, I get it. You'd like to maximize your benefits. No one likes paying tax. Okay. If you do not have a good handle on your finances, be very, very careful about doing this. And honestly, I would keep it black and white. If you don't have a good handle on your finances, or maybe you're looking at your finances right now saying, it doesn't really make much sense, get the personal stuff out of there. Because what I see a lot is just that. I go down through, I look at Carm's books, I look at his numbers, and I'm like, I don't get this, Carm. You should be making more money. Your overhead is a little bit high, your margins don't make sense. Then we start unpacking it. Well, no, Carm, your business is making good money, but there's 10, 15% of your sales is going to your personal life. So it's kind of skewing the picture of what your business is actually doing. So what'll happen is a lot of people are trying to get some tax savings, and what you're giving up is the effectiveness, or, a lot of times the accuracy of the financial statements.
Well, you just I mean, we could end this episode right now and call it quits because I think those couple of points are huge, huge. And I love the rich versus wealthy. What you're saying is the people that have wealth have it sometimes beyond their business.
Yeah, and I think it also is a little bit deeper than that. Rich is instant gratification, right? Hey, I'm making money. I got money. I'm spending it. It's coming in. I can see it in the bank account. A lot of time building wealth isn't sexy, right? You're not hitting home runs. You're not looking for 40% returns in a year. If anything, you're looking for, middle to high single digit returns, but not having a downside to that. So, we're luckily for us, from the savings aspect, we're in an incredible time right now with high interest rates. You can go out and get virtually risk-free returns of 4.5, 5%, which is unheard of in my lifetime and really unheard of in most people's lifetime. But the fact that a lot of people aren't utilizing that and jumping on that also shows, what? The savings is just not that attractive. People want to be able to use that. People want to be able to leverage that and try to hit home runs. But if you look at this, slow and steady wins the race, and compound interest is a magical thing. You set it aside, take it out of your, main operating account so that you don't kind of spend too much of it. And that thing's going to build over time. And one day you're going to look at this and say, wow, I'm glad that I started this 20, 30 years ago, because, when we're looking at investment, time is a much more valuable resource than really dollar amounts, for most situations.
Got it. I've always wanted to ask an accountant this question. All right, here goes. So it's the end of the year.
Hmm.
And you and I are on the phone and we're chatting, and you said, "Wow, Carm, you had a great, great year. You made $80,000." And then
Hmm.
I say to you, "Hunt, where is it? My checkbook says like 2,000."
Yeah.
And then Hunt says,
You took it all out.
"You spent it, or
Yeah.
you took it all out."
And
And
in that case, it's not bad, right? You took out a little bit less than you make. What about over the last couple of years? This is a really good point, Carm. I actually wanted to bring this one up because over the last couple of years, we've had a very unique business client where you cannot look at your checkbook to judge your business. A lot of people joke about this. Oh, you can't do checkbook accounting. To a certain extent, you can, right? If you ignore loans and things like that, if you got money in your bank account, business is probably doing well. And if you don't have money in your bank account, it's not a guarantee that your business is doing poorly, but it's not doing good. Now, a lot of people have kind of been masking some of their own weaknesses in their business or profitability because we've had PPP, PPP round two, ERTC, SBA. We've had the average shop probably get 300 to $500,000 of money over the last 3 years that we've never gotten in the past and will never get in the future. And what we're seeing right now is a lot of people kind of coming to a wake up call where we have a little bit of a, softening economy and a little bit of a pullback in the demand in our space of, hey, I've burned through hundreds of thousands of dollars. Right now, I'm sitting here and I'm paying back a $500,000 SBA loan that I've already kind of spent. I don't really have much to show for it. I didn't buy equipment. And that's the example that you were talking about there before, Carm. How were these people able to make $100,000 but pull $250,000 out of their business every year because of these government programs? And also, like I was talking about before, if you've been living your personal life off of $250,000 worth of money or distributions out of your business, that's going to be a pretty hard wake up call when you're going to have to live off of your business profits now, and we don't have some of these government programs like we did the last couple of years.
I don't know, Hunt. I just heard from a friend who said one of our mutual friends is getting sued by the government because they grabbed some money they weren't entitled to.
Really?
Yeah, so it's so damn interesting as to what's going on, which brings me up to the word COVID,
Yeah.
and so many people that I'm chatting with, and believe you me, I bet you are too, and you're probably whispering in your client's ear, COVID's over.
Yeah.
And we got to go back to doing business the way we used to, or at least that generous dump that we've had over the so many years. Let's go back to seriously running our business. Have you been telling people that?
Yeah, I mean, we have a unique perspective, at our firm that we only deal with shops and we deal with them all across the country of all shapes and sizes. So have, a unique insight of what our shop's doing. And just like when things are good, you can't oversimplify this and say, hey, this is a generality that all shops are kind of seeing here. But what I would say is, as a trend for probably the last 2 quarters, is demand is falling down. You see the numbers, you see the inflation. The average
Yep.
American is broke. They have no money. They have less and less access to credit. Think about if you're doing in-house financing, they're approving your customers for less financing. Banks, creditors, everyone is a little bit nervous right now. But if you take a step back and you look at over the last 10, 15, 20 years, it looks like a pretty normal time of this industry, and what the big takeaway is, and guys that have been doing this for a number of years know this. If you have a good year, don't get too excited because it's probably going to come back down. If you have a bad year, you can't get that down because it's probably going to come back up. Months, weeks are the same things. And so I think that, for maybe someone that had started their business career, specifically in this industry rather recently, you might have had a little bit of a unrealistic expectation of how good business is or how consistent profit is. If you're a small business owner, you got to think of yourself as like a commission salesperson. Hey, when you have those good months, those good weeks, you got to stick away some of that money for a rainy day. Yet it feels like a lot of small business owners are the exact opposite, that they make $30,000 in profit, the most money that they've ever made in their life, and now they start living their life like that's what's going to be guaranteed for every single month going forward, which just is almost never the case.
I love it. Commissioned salesperson.
Yeah.
That is a great analogy to have. Ooh, I love that. So let's go back and talk about. I wanted to ask about emergency funds. You just mentioned that, and thank
Hmm.
you for saying that. But it also, in my mind, goes back to cash flow management and what to do with your cash and how to respect it.
Yeah, so let's talk about cash figuratively first, and we'll talk about literal cash. I mean, literal cash has become a little bit less of an issue because it almost feels like in today's day and age that cash is already illegal, right? It's super strange to take it out. It's almost even weird to deposit it now. And you have, look, you're even framing it. It's becoming so rare behind you, right? But the big thing on cash management is, cash pays the bill, profit doesn't. Right. And so you need to have cash in the banks if you want to pay the bills, meaning can't take it out. And really, where I would talk about on that is what is a good number to have in there all depends on who you are, right? The more reserves that you have, the less stress you're going to have. I guarantee that. Guarantee it. It's always the easiest way to run a business if you got money in the bank, because you know how it is. You pay your parts vendors probably one time a month, you pay your sales tax one time a month, you pay your employees 2 to 4 times. So you have monstrous expenses hitting periodically and income kind of spread out. So if you want to run this really tight and you're on top of it, you can, but it's going to be a little bit more work than if you had some extra reserves. Now, general rule of thumb is 3 to 6 months of operating expenses. So if your overhead is, $25,000 or so a month, then, realistically it should have about 75 to 150 in your bank account. Does that mean that you couldn't run it off of 40 or 60 or 90? No, but you want to be able to say, hey, I have enough in here that I could have a couple bad months and not be in a cash crunch. Another thing to think about there is, when we're talking about reserves, you don't necessarily need to have it liquid right now. One of the best options out there is if you can have access to credit or a credit line. Let's say that I wanted to kind of run the business a little bit tighter with 50 grand in my bank account, but I know that I have $100,000 credit line that if things
Yeah.
get tight, I
Yeah.
could always draw off of.
Yeah.
That's perfect because I'm not getting charged interest that, I'm not using.
That's a great point. I mean, a great point. How many of your clients do have a credit line they can rely on, and or are you encouraging them?
Yeah, so I'll be honest, credit lines, I mean, you got really two major options. You got a business credit line, which you can either have, you could go and say, hey, I want to buy, I want to get into tires. So I want a credit line to be able to buy, at volume or at scale. If you own a commercial real estate, you can get a credit line off of, the commercial if there's equity there. And then lastly, home equity line of credit. Now, depending on how much money these are, they're generally pretty cheap. If I'm sitting here right now listening to this and I know that I got, 100 or a couple 100,000 of equity on my house, I'm going to probably talk to my bank about getting a home equity line. And even if I have no plan to ever use it, they're generally pretty cheap to set up. You might be paying $1,000 or something, but Carm, I mean, hey, I'll give you $1,000. That means that you have guaranteed access to up to 200 grand in minutes. I mean, you can't put a price on that.
Right.
Now, the reason I said I'll be honest here is it's getting trickier is a couple years ago, they changed the rules where if a bank gives Carm a credit line, hey Carm, you have access to 200,000. In the past, me being Wells Fargo, I could still give your money to someone else as long as you weren't drawing off of it. The way that they made the rules is I have to kind of earmark your money. So they're getting a little bit
Really?
less apt to give these out because if you have one and you don't use it, which is what we're trying to do, they make no money off of it. So
So
some of the
say
big
I had
ones
a
are getting
hundred
out.
grand, hundred say I had 100 grand home equity, and I wanted to just cover my butt and go for 175. That 175 has to be earmarked, so they may hesitate depending on what the bank's cash status is.
Especially like if you had, let's say you had that $100,000 credit line for a year and you never touched it, they
Yeah.
won't give you more. And so what I
Ah,
tell people is if you have a credit line, read the fine print. It's not unlimited. They can close it at any time. They usually have a certain time frame on it. I always tell people, hey, we don't want to see 12 months with no activities. Run something through it. Give them a couple bucks of interest, right? They're a business. They're not going to do this if it's all downside and not making any money. So I'm putting a bill on it. 3 days later, I'm going to pay it off every once in a while. So they're seeing activity of, hey guys, I'm using this, as intended.
let them earn some money on it, even if you don't have a need.
Yeah.
Just move some money around. I love that. By the way, a great quote from this last few minutes is cash pays bills, profit doesn't.
Yeah.
Let that sink in. Let that sink. Okay, I got a ton more things on my money mistakes list. How about one on yours?
So let's talk about cash, right? Let's talk about physical cash because it's becoming less and less of an issue, but people still play these games, right? Well, hey, if you sell something, everyone wants cash because it's just between you and whoever else you want to tell about this. Now, the issue is when you start mess around with the cash for your business. Hey, I don't deposit cash. If a customer pays cash, we put it in there, we use it for lunch for the guys on Friday, or I got a part-time employee that I pay cash. I get it. Again, it's very similar to the expenses on it. And everyone likes to play these games, but you're adding variables into the financial statements again that are not only losing the effectiveness of your financial statements. One of the largest things that we're doing with that cash, and specifically cash clearing, is we're using QuickBooks to reconcile your shop management software to make sure that the money you were supposed to collect actually ended up in your bank account. Because what I always tell my new clients when we start going down through and discussing this is, hey, we cannot be held responsible for any sort of cash clearing issues, because you stealing money looks the same as your advisor stealing money, or looks the same as your bookkeeper stealing money, et cetera, et cetera. And if you're playing around with the cash and your team knows that, then you're really opening yourself up to, a possible pretty big disaster there. Because once you kind of lose that accountability, and we have money going here, money going there, you're never going to be able to really go and hold your general manager accountable when a deposit comes up short, because how are you going to be able to prove that it was them and not you?
Great point, great point. Talk about overspending with me now and budgeting. If I, here I've got that money and it's in the account, and I just got lured by the tool guy to buy this really neat new cool scanner because everybody says that they want it.
Yeah.
And I go ahead and I do it, and I buy all the extra features and whatever it takes and all the subscriptions.
Yeah.
I didn't quite set that equipment fund up, but I'm using my cash that I have to actually pay my parts bills with this particular weekend. Doing anything with budgeting, not only expenses, but budgeting investments.
So I'm not actually a big budget guy, which I know probably surprises a lot of people. The big reason why I'm not generally a budget guy, really hard, is just because the overhead for a shop is generally pretty much dictated, right? Your rent is what it is to a certain extent, insurance, advertising rates, utilities. And the big budgetable items are then really dependent on sales. So, I could budget this, but that's based on a level of sales that is now 50% higher than what I had before.
Right.
And so there's a little bit too many to go really hard on it. But what I always try to do is take the emotion out of these decisions. And that's good advice for a business or personal. Now, the reason why I think it's a little bit easier to make these decisions from a business standpoint is we can look at it from a return on investment standpoint, and generally can't do the same, for, non-investment things personally. But a lot of times we have clients looking at equipment or looking at improving their property or looking at doing something based on a tax savings aspect of this. Well, hey, I, owe a bunch of taxes, so I got to buy a new truck. And what I always tell people is we should never make a decision solely based on taxes. At the end of the day, that decision has to make business sense, and we're going to weigh the taxes into it as well too, to make sure that it's still the right decision. But if I need that new scan tool, I'm looking at it from, all right, how much am I going to spend and how much money is that going to make me? As long as this is going to pay for itself, it's going to generate revenue, then it's never going to cost me anything because it's paying for itself, right? Hey, you know what? My alignment rack is out of service. I can't sell alignments. Now, I get a new alignment rack. Not only is that going to save money on taxes, that's actually going to drive revenue in the future. Now, that $110,000 dually 3,500, is that going to make you any more money? No. Right. And so being able to look at this stuff and saying, all right, I have, more or less a finite amount of money that I can spend. What is the most effective use of these funds to drive my business, drive my wealth, save money on taxes, instead of just, hey, I think I have a bunch of money right now. I've always been looking, or my buddy was talking about that new scan tool, whatever it was. And you're just kind of firing from the hip based on feeling. And you start doing that, and you're probably not going to be making the best long-term decisions there.
The fear of missing out. My buddy bought it, so I need to keep
Yeah.
my
Everyone's buying it.
yeah,
Why? I don't know.
everybody's got it.
Because
Everybody's
everyone's buying it, right?
You mentioned the word insurance just a few minutes ago.
Yeah.
Could that be a money mistake that we're under insuring ourselves just because we don't wanna spend the money?
Um, I would say generally, I wouldn't say from a money aspect of it, Because most of these insurances that people don't have is extremely cheap, right? It's specific riders, it's specific, earmark things that might be a little bit different from your shop, whether you have specialty contents, inventory that's different. I would say again that as not someone really looking at this deliberately and making sure that they're being protectionary of, not only their assets, but their future liabilities
Yeah.
of, hey, we're talking about cash. We're talking about preserving cash, making sure that we have reserves. Lawyers and the government's pretty good at taking those reserves if you're not careful and protecting yourself.
Thank you for that. One of the things that, if you're not a budget person, okay, I get that. But do you ask your clients to take a look at the return on sales that an expense item would be and say, listen, if you're going to keep marketing within 5 to 6% of your sales and your sales are up, then you've got some money to spend. Does the typical client appreciate what that ROS, return on sales number, means as far as their expenses?
So it's a really good question. And yeah, I mean, that's what people always ask about advertising. Well, how much should I spend on advertising? And you can't look at advertising from a dollar spent, right? The Walkers would appreciate this, right? I would never judge an advertiser based on their budget. It's all right, what is that going to get me? This is all return on investment. And I think if anything, you break it down and say, hey, I don't have a dollar budget, but I have a return on investment budget. Now if I have a really long term, I'm trying to grow something really big, hey, I might have a lower return on investment because, Carm, I'm trying to take this, to the millions, to the billions. Right now, if I'm in a place where I just start up this other location, I need to get this up to speed quick. I'm going to need customers. I'm going to need it fast. But it's kind of crazy if I go and I look and say, all right, I'm spending $10,000 on the advertising. If that's driving me $40,000 in new sales every single month and I have the capacity, I'm going to say, well, what if I give you 20? Will you give me 80? So I don't really care about how much I'm spending, but if I'm giving them 10,000 and that just drove in $8,000 worth of new work, guys, it's not the 10,000 that hurts, it's the negative return on investment that is going to be the reason why I'm making a change.
Good. Thank you for that. I want to talk about the cardboard box syndrome. And I would love to know from you how many people have picked up the phone and says, Hunt, save me. All of my receipts are in cardboard boxes.
Yeah.
and and I'm in kind of trouble. I know that I am. And I got a coach now. Is it QuickBooks? Is it bookkeeping? Oh my God. It is time to turn my business around and get out of the throw it in the cardboard, put it in the cardboard box that says expenses and it says this and it says that.
I don't most of them aren't not kind enough to label it, right? And so we have we have a name for clients like that. We still have a good bit. So we call them shoebox clients, right? At the end of the month, you put all of your paperwork in a shoebox and you send it to your accountant. They decipher it and then we send back the financials. 30 years ago, we started doing that. We would literally drive around to stations and pick up their work. Now, it's funny we call them shoebox clients because generally it comes in break clean boxes. They're like perfect. They're perfect sizes for. They're like 8.5 by 11, so it works fine. Um, but the big thing I will tell people on why it makes sense to change is if you are doing, shoebox, break clean, end of month accounting on there, there's limitations to that. The accuracy that you can get there is never going to be to the level of accuracy if you're doing this, on a daily, let alone, weekly basis to keep up with it real time. Think about how much you would be able to remember about a transaction that happened 2 days ago versus 4 weeks ago. The farther and farther you get away from it, the better likelihood there's a chance that you miss something, misclassify it, whatnot. Another thing is numbers always need to be accurate, but a lot of times timeliness is more important than accuracy. And by doing shoebox, accounting after the fact, you are naturally going to have a delay. There is a amount of time it takes to close a month, get all your statements, put all of that together, put it into a box, UPS it. By the time my team gets it, we're almost to the end of the following month. And then what? We're 45 days behind. I would much rather see up to date financials for the most recent month that are 98% accurate than look at 3-month old financials that are 100% accurate. Timing is very important. Hey, it's great that I made money in April, but we're now in June, almost July. It really doesn't make sense to me unless it's current.
You're right. A good owner wants to react. And to your point, the P&L, if the P&L doesn't come out within, say, 10 or 15 days of the end of the month, there's not a lot you can do to react. And especially the way the trends are going today and people spending money. If your gut is telling you to make moves, don't wait on your financial statements.
Oh
It's
yeah.
the world around you is telling you what to do.
Well, and even, a lot of times we see this even more subtly, right? It's you're going to be able to feel if things went from good to bad, right? I have no money, I have less and less money in my bank account. But a lot of times, people have been doing this for 30 years where they think they have a good handle on their financial statements, but they maybe only do them officially on an annual basis. You're not going to be able to feel that 5% swing, right? You're not going to be able to feel that slight deterioration of profit. But a business that does $2 million a year, just that slight 5% pullback just cost you $100,000, right? And so that's what I always explain to people of, hey, if you've been doing this for 30 years and you're making profit and you have a decent shop, there's probably nothing that you're missing out on. But if you're not looking at these numbers, if you're not looking at these trends, looking at inflation, in the last couple of years, if you weren't diligent with your labor rate, diligent with your prices, what we saw is expenses creeping up. And if your sales were flat, you would have your profit kind of creeping down where, yeah, hey, didn't really change anything major, but every single month, a couple bucks here, a couple bucks there, replicated 1,000 times throughout the year is how you look at this and say, man, we're up 20% on sales and I'm down 5% on profit. How did this happen?
Yeah.
And there's probably nothing major, but it's just a little bit, a couple different places.
That's a great point. It's a great point. The woulda, coulda, shoulda thing.
Yep.
Hey, did you ever tell a client, get off your counter, you're giving stuff away?
uh I wouldn't say in those words on it, but I would say that I have seen firsthand the impact that that makes going both ways on this, right? A lot of times, a lot of people get into this industry. I think you and I can both agree on this is, it is filled with good people, and most people are doing this because they have a passion for it and they have a passion for helping people. They're not always the best at getting paid fairly for what they are providing, right? And so they're looking at this job of saying, man, that's just so much money. I'm going to try to, give them a 10%, 15% discount. The issue is if your profit margin is 10% and you're discounting it off 15%, you're discounting away all of the profit, right? You're giving away your profit to your customers. And so sometimes what we see is by shop owners getting off the counter, not only are they able to kind of stick to the margins better because the employee doesn't have as much ability to change that stuff. Also, when you're able to step away from the counter, you're able to see the bigger picture, right? Able to do a little bit more of long-term planning, be able to work on your business, not in your business. Now, the same flip side though, I see guys that get too removed from the counter, not listening to the sales, not checking in on how stuff is getting priced, not being diligent about making sure that we don't have any sort of fraud or embezzlement. But you also don't want to get too disconnected from the counter that, you're missing mistakes that the guys are making or bad habits that your guys are falling into, that you might be able to kind of utilize and coach them up a bit. But you can't oversee or coach anyone up if you're also stuck on the counter, checking people out and discussing repair orders.
Great, great points. Great points. What else is on your list, my friend?
So the biggest thing on here is really, cash is king, and it sounds cliche, it sounds stupid, but I cannot emphasize that enough. I think that it's a little bit disappointing that we had a really big wake up call that unfortunately I don't think was harsh enough because COVID was very favorable to most all shop owners out there. Now, are there a lot of business owners out there that would probably say the exact opposite? But COVID was a little bit of a wake up call that profit can dry up in an instant. Right. And the only thing that got people through that was having reserves and really these government programs. But what I would be doing if I was a business owner is, obviously I'm always about, maximizing profit, maximizing what my business is doing, but setting my business up for the long term is what I'm worried about. If I want to be here for the long term, I got to obviously have cash flow. I got to have reserves, but I have to have a long-term plan to make sure that I'm meeting my goals, not only for the business, but for retirement. Deliberately investing again, because I don't want to be doing this for the rest of my life. So if I want to retire, I need to think about that sooner rather than later, and really just living my business and personal life and how they get very intermingled with a bit more of a plan than just, hey, I did side work in my garage. I ended up outgrowing that, and I ended up in this shop and then kind of outgrew that. I feel a lot of people are just kind of getting blown with the wind through their life instead of making decisions and choices on their own.
Wow, what a great point. A great way to end it too, because we could go on for another half hour and get grainy in this decision, but I think it's a perfect episode for someone to go out and say, "Ah, that sounds like me. I've done that. God, somebody's been pushing me from the left or the right." And what I just think we did here, Hunt, was we went to night school. And
Yeah.
this has been one of my big kickers I've been chatting about lately. And I tell people when I see a service professional, I say, "You got to go to night school." Let me see. College doesn't have a course on automotive management or being a so I said, "Go get yourself a coach. Go get a great consultant. Go find a great attorney. Go get a good CPA and get all this stuff coming. Join a networking group. It's night school." And
Yeah.
listening to this podcast and listening to your podcast is night school. There's so much to learn. Please keep those incredible episodes coming. You have taught me a lot that I thought I knew. And how many
Appreciate it.
times have you given me storylines to repeat in my own episodes? Did you listen to Hunt talk about that? So thank you so much for being on the Aftermarket Radio Network. Hunt Demarest, Paar Melis and Associates, and the Business by the Numbers podcast. You have a enjoyable holiday week coming up here.
Thanks, Car.
Thank you, man.